Hello everybody, how are you? This is Tapus Kumar Basu. On behalf of my channel, the technical analysis of financial product. Today also I would like to explain you about the range of Nifty 50 and Bank Nifty for this week. For this week. So now let me straight away go to the daily candlestick chart of Nifty 50. Firstly, I will explain you technical based on technical parameter. I explain you Nifty and Bank Nifty. After that, I'll also tell you about the global cues. Especially we are very much worried about the about the conflict between Russia and Ukraine. So for which the market has nosed up very drastically in our domestic market, as well also Europe market and American market is very much affected for that also. I will explain you. But firstly, let me straight away explain about that technical implication of Nifty based on technical parameter. What would be the range of Nifty? What would be the resistance and support level of Nifty? Now let me straight away go to the daily candlestick chart of Nifty. You see, this is the daily candlestick chart of the Nifty. This is the last Friday's candle. We see that it was opened on 17,236.05 and it closed over 17,276. I mean, closer was higher than the open. That's why it is a bullish candle. So as far as candlestick pattern is concerned, this is a bullish candle, but we cannot come to any conclusion whether it should go towards upside or downside. For that, son, we have to consider about some technical parameter. Initially, I have already plotted over here Elliott waves, and earlier also I've told you that how does the Elliott wave moves in the market. Elliott waves generally moves in the market 5:3 ratio. First 5 ratio to be known as a impulsive ratio, and next 3 ratio to be termed as a corrective ratio. You see, this is the Elliott waves. You see, this is the Elliott waves. So already the first impulsive wave has created, which has been marked as one, and this is the second impulsive wave. This is the which is marked as two. Now we have to see whether it should go towards the upside. It means from here, if we see there is another bullish candle is forming, it means this is the end of a second impulsive wave and the restarting of a third impulsive wave. So we cannot say confirmly, we cannot say that third impulsive wave has already been started. We have to wait to cross particular this point, this intersection between second impulsive wave and first impulsive wave. If you see there is a one big, the very next day, if you see there is a big bullish candle, and if hasn't crossed particular this one, then you have to wait for the another candle so that it crosses particular the intersection between first impulsive wave and second impulsive wave. Then we can say that the third impulsive wave has already started. Then we can take a long position. It means the market is supposed to move towards the upside. So as far as the Elliott wave is concerned, we have to wait another 2 or 3 days to get the confirmation whether that as far based on the Elliott waves, whether the third impulsive way is creating or not, right? So now we cannot come to any conclusion because we have to wait for another 2 or 3 days, so that we can come to a conclusion the third impulsive way has created. Now the market will move towards upside, based on the Elliott waves. Now, apart from the Elliott waves also, I have also plotted over here the Fibonacci retracement zone. You know that Fibonacci already plotted Fibonacci retracement zone, and according to the Fibonacci retracement zone, now the Nifty is trading above the 38.2% of Fibonacci retracement zone. This is a golden ratio. So as long as it will trade above this zone, there is a possibility to be retraced towards the upside. So if it retreats towards the upside, then we can say that immediate resistance would be 17,400 and the very next resistance would be 17,500. Whenever the next resistance will cross, there is 17,500, which is 50% of Fibonacci retracement zone. It means this is also the intersection between first impulsive way and second impulsive way. On that case, also Elliott waves also will confirm us that the third impulsive way has created, and according to the Elliott waves, the third corrective wave should be greater than the first corrective wave. It means it will so we can expect some long position towards upside, right? So this is as far as Fibonacci retracement zone is concerned, as far as Elliott waves are concerned. Okay, so now apart from it also, we can also check the another momentum indicator, what the momentum indicator says, but this is just already I have plotted over stochastics. You see, generally we see that there are two lines in the stochastics. This is a stochastics line and this is a dotted line. Earlier also I have told you when the stochastics line intersect the dotted line from below, which is known as the bullish crossover. But here we see that the stochastic line has already intersected the dotted line from top. It means this is a bearish indication. As far as the stochastic is concerned, this is bearish. And what the RSI says, RSI is also another important oscillator. A lot of traders are using particularly this RSI, but the RSI is below 50. The below 50 means RSI is also in a negative zone. So as far as RSI and stochastics are concerned, market is negative. As far as Elliott waves is concerned, I've already told you there are certain conditions need to be fulfilled. If you see the third corrective wave has started, it means the market will go towards upside. And as far as Fibonacci retracement zone is concerned, as it is trading above the 38.2% of Fibonacci retracement zone, it means there is a possibility to be retreats towards the upside. If it moves towards the upside, then first immediate resistance would be 17,400, and the very next resistance would be 17,520, and that which is 50% of Fibonacci retracement zone, and this is a 61.8% of Fibonacci retracement zone, that is 17,790. To cross that 17,400, 17,500, which is the 50% of Fibonacci retracement zone is concerned, means the third impulsive way has already been started. So based on that, we can confirm that market will move towards upside. It means that as far as on particular on that circumstances, we can say the Elliott to as far as Elliott waves is concerned, market there is a possibility to move towards upside, and as far as the Fibonacci retracement zone is also concerned, there is a possibility to be retraced towards upside. And what would be the support? The support would be that the first support would be 17,250, and very strong support would be the 16,850. Correct. So this is as far as the Nifty is concerned. This is the range of Nifty for this week. Right. Apart from it, also let us check the what is the PCR of Nifty, which is also very important part of particular Nifty. Let me start with the PCR. PCR is also one PCR one is a neutral zone below one, which is called a which is negative, and above one is a positive. You see, the PCR is 0.999277. Right. So this is a negative PCR also, but here we can see then 17,000s, particularly in this strike rate, this 17,000 put, where you can see there is a lot of that open interest is 61 lakhs 30,000 30,000s, and this could be the it means lot of put writing is happening over here. As far as call writing is concerned, if the particular 17,500, we can see there is a more call writing is happening. So more put writing is happening in 17,000 strike rate, and more call writing is happening 17,500. But as far as PCR is concerned, market is it indicates a negative as because it is below. Once the PCR above crosses one, it means the PCR is going towards the positive. Positive PCR means there is a positive PCR means that more put writing will happen than a call writing. It means that the market is supposed to rally towards upside. This is as far as particular this uh, technical parameter this PCR is concerned. Now once again, let me go to that chart. I mean, this is the daily candlestick chart of Nifty. I have also explained you what are the condition I mean, what are the condition to be required to move towards upside. So if it moves towards upside, once again I'm telling you, immediate support, immediate resistance would be 17,400. The very next after that, the next resistance would be 17,520, and the third resistance will be 17,790. By this week I am talking about, and the support would be 17,250, and strong support would be 16,850. This is as far as the technical parameters are concerned. But as far as global cues is concerned, because we know we are all very much worried about the conflict between the Ukraine and Russia, because the Russia at any point of time, Russia may invade the Ukraine. If the Russia invade the Ukraine, then there will be huge impact on that equity. So the lot of investor will definitely move to the safe haven. Especially they might move to the gold sector. They might move to the bond sector. That's so a lot of fund will be come out from equity to bond and gold. On that case, the value on that case, the market will be very much very much down. And that even also, as far as the currency matter is concerned, that if that this conflicts, if the Russia invades Ukraine, and also because the investor will generally prefer the safe haven. The safe haven here means they basically prefer, because they will prefer to buy dollars and or euro dollar. So price of the dollar in euro dollar will be very stronger on that case, and which will impact very much very negative, which will impact negatively in the equity market. As far that, and presently the global inflation is already the US is or the US is very much worried about the inflation, and the global inflation right now is 3.5%. And if the conflict between Russia and Ukraine increases more and more, then there is a possibility to enhance the global inflation around to 7.5%, as far as as far as that uh, uh, that is experts are concerned, right? Especially so naturally, so the global, as far as the global matter is concerned, it is a very difficult. Nothing but no, nobody knows what will happen in future, what will happen in last 2 3 days, because the way the tension is being creating in between Ukraine and also Ukraine and Russia. And another thing also, that the oil price, that if this actual Russia invades the Ukraine, so oil price will be impacted hugely. If the price of oil price start moving higher and higher, which will definitely create a negative impact in not only in the global equity market, but also in a domestic market also. Right. So this is as far as global matters is concerned. And to be very honestly, I'm telling you, this is purely for educational purpose. This is a educational channel, and whatever I'm talking about, this is purely for educational purpose. If anybody would like to do any kinds of trading, request you to please first do consult with your own respective investment advisor. After that, you take your own decision. This channel is not responsible for any kinds of stock tips or any kinds of selling and buying, and this channel doesn't suggest for any stock tips or any stock advisory. And I would also request you to please do subscribe this channel, and to share this channel with your near and dear ones also. And those who are interested to work with me, please do. You can also work with me. For that, you can also contact me through my WhatsApp number in the description box. I've already given my WhatsApp number. Apart from it also, I am having own my Telegram channel also. This Telegram channel is also for educational purpose. The link of the Telegram channel is also given on the description box. Here, those who are interested to join my Telegram channel can also join the Telegram channel. Right. So this is as far as the Nifty is concerned. Please watch my next video, which I'm going to explain you about the Bank Nifty for this week. By saying this, I'm going to sign off today's program, and thank you very much and have a great day.